Hey everyone, welcome back to Corporate Decoder. Today CWT just filed an 8K and I am seeing one impact that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The big news here is a key regulatory decision and it looks like this is a win for California Water Service Group. California Water Service Group, ticker CWT, is a regulated water utility company. They provide water and wastewater services to communities across California, Washington, New Mexico, and Texas. Think of them as the essential service providers that keep the lights on and the water flowing for millions of people. They are a pretty stable company. Generally, but like all utilities, they are heavily regulated. So the main event here is that on the 30th of April 2026, California Water Service Group, which they call the group, put out a press release. This press release is all about a final decision from the California Public Utilities Commission, or CPUC. This decision is about the 2024 general rate case for California Water Service, which is their biggest subsidiary. Basically, a general rate case is where a utility company asks the regulators, the CPUC in this case, to approve changes in how much they can charge customers for their services. Companies need these approvals to cover their operating costs, make necessary investments in their infrastructure like pipes and treatment plants, and earn a reasonable profit. So a decision from the CPU is really important for a company like California Water Service. And based on the news headlines from around May 1, 2026, it looks like this decision was a positive one for the company. We're seeing headlines like CPU's Cal Water 2024 rate hikes and $1.45 billion plan. This suggests that the CPUC has approved the rate increases and a significant capital spending plan for the company. This $1.45 billion plan is a big number. For a company with a market cap of around $2.5 billion, approving a plan of this magnitude is a strong endorsement of their investment strategy and future needs. It means the company can move forward with upgrading its water systems, which is crucial for reliability and serving customers. Now, what does this mean for the company's financials and its investors? Well, higher rates generally translate to higher revenue, given that California Water Service Group has about 1,336 employees and a P/40 ratio of around 21.2. These rate adjustments are key to maintaining profitability and supporting their market valuation. The approval of a large capital plan also indicates confidence in future growth and operational stability. While this filing itself, this 8K, doesn't contain the detailed financial tables we often see in 10Q or 10K reports, it points us to Exhibit 99.1, which is the press release. This press release is where the company would have elaborated on the specifics of the CPU decision. We can infer from the headlines that the approved rates and capital expenditures are substantial and likely beneficial. California Water Service Group's common shares trade on the New York Stock Exchange under the ticker symbol CWT. Being listed on the NYSE means they have to meet certain standards, and getting approval for rate hikes and a massive investment plan from a state regulator is a critical part of their business model. Major institutional holders like BlackRock and Vanguard, who own significant chunks of the company, will be watching these regulatory outcomes very closely. These decisions directly impact the company's ability to generate earnings and return value to shareholders. The fact that the CPU has given the green light to a substantial plan suggests fewer immediate risks from regulatory roadblocks, which is good news for those large investors. Looking at the broader context, other news from around May 1, 2026 indicates that California Water Service Group's Q1 earnings missed estimates due to higher costs. This might seem concerning, but it underscores why getting rate case approval is so vital. Utilities operate on thin margins, and unexpected increases in operating expenses, like labor or materials, can quickly eat into profits. So the CPU's decision on rates is a crucial balancing act, allowing the company to manage these rising costs while ensuring service affordability for customers. The headlines mention a $1.45 billion plan and alongside the Q1 earnings miss. It paints a picture of a company managing cost pressures while securing future investments through regulatory approvals. The filing is signed by James P. Lynch, the Senior Vice President, Chief Financial Officer, and Treasurer. This is the executive team ensuring compliance and making sure the company is operating within the rules. Their role is to navigate these complex regulatory environments and communicate significant events to the market. My take on this filing is that it's a significant positive development for California Water Service Group. Securing approval for their general rate case and a large capital investment plan from the CPUC is a crucial step. While the Q1 earnings showed some pressure from higher costs, this regulatory victory provides a solid foundation for future revenue and investment. The major risk I am watching for utilities like CWT is always regulatory. Will they get the rates they need to operate and invest? In this instance, it seems they did. What I am actually looking for is how effectively they execute this $1.45 billion plan, and if the approved rates are sufficient to offset ongoing cost inflation in the coming quarters. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.